Morning, everyone. Thanks for joining us for Season 2, Episode 3 of Provision. For those who've tuned in before, welcome back. For those tuning in for the first time, welcome. I'm VK from the Pro Founders team. The eagle-eyed amongst you will notice that we aren't joined today by Greg Marsh, founder of One Pine Stay. Unfortunately, illness has dashed our plans to record an episode with him, and so we look forward to having him as a guest later in the season. Instead, I roped in the equally photogenic and charismatic regulars on the show, Sean and Rogan from the Pro Founders team, who couldn't quite be here today right now, but instead to record an episode yesterday and answer your questions on raising an angel round. As before, we'll be limiting the answers to around 90 seconds so we can get through more questions and keep Rogan and Sean honest. So without further ado, I will be starting off the recording and we can, as always, feel free to ask any questions in the Q&A section. And if we have time at the end, we'll try and get through as many that we get through live as possible. Cool. All right. So here we go. Question number one then. So the first question here probably sets the scene. When should I raise from angels versus perhaps raising from an early stage VC fund?
Excellent. All right, VK, I will go ahead and answer this one first, if that's okay. So thank you for organizing and coordinating this session. So it's good to be back on it. I know I was out for a few episodes, but others are here. We're here on our behalf. So raising from angels versus raising from VCs. The reality is what you need to do is raise capital for the business. Therefore, you need to find the right investors given the stage of the company. Now, generally, the reason people raise from angels is that angels write slightly smaller checks. Angels can invest more on gut feel knowledge of an industry as opposed to metrics, KPIs, etc. And angels can benefit as well from some of the programs that are out there that makes their investment kind of more worthwhile as well. EIS and SEIS programs as well. So I think the reality is about getting company money into the business. There are many routes to doing that. It turns out that angels can be a very good way to kick that off.
I mean, look, the reality is nowadays all the lines are blurred. I mean, when do you do friends and family? Friends and families might just be angels. A lot of the angels write bigger checks than we write. A lot of the VCs write smaller checks than the angels. For me, I think there are 2 points about angel investing. One is the point that Sean made about EIS, which has a valuation impact. But the other is, I think that they're better for before product market fit if they really get the market. So go for an angel that really, really understands your market, and you can often get the passion of the market outweighing the lack of product market.
Got it. Okay. I mean, there was a question on that, which was, and so I'll stick with it, which was, do I need to raise from angel investors that have specific startup or industry experience? Sounds like, Rogan, you're saying, probably specific industry experience is preferred.
Well, actually, I'm more saying, I think investors are investors. Angels are fantastic investors, often better investors than VCs. VCs have other skill sets. What I was saying was that at a time when a pitch deck might not be ready for an institutional investor or a large investor, what can swing the balance sometimes is a love or a passion or a real interest in a sector. So either find a VC that only does one sector, but often what you'll find is what's classed as an angel or a super angel, it has a particular passion about a sector and will invest in that sector and will give you leeway, understand your proposition better, and then give you fabulous feedback.
But Rogan, there's also a benefit if you are able to raise from an angel who's an expert in a specific area or has built a company in that area. It provides kudos and signaling for the next round as well, right? If you're able to convince an expert in this industry to invest in your company as an angel, it brings credibility to the business. It can open up partnership deals. It can raise awareness for the next round of investors. So there are multiple benefits to the kinds of angels that you bring on board as well.
That is true, except arguably, if you can get an angel who's not in that sector to invest in you, how much better signaling is that? They don't even have the comfort of knowing them. So, I mean, I think it's the feedback. The signaling, you know what? We at Pro Founders, we love angel investors. So we don't signal one better than the other.
Got it. So actually, sorry, just to stick on this, perhaps last question on this. One of the questions we received was, does the pitch to an angel investor differ dramatically from the pitch to a VC? I guess in some ways, yes, but perhaps in a lot of ways, not really.
I don't think it should really differ, right? I think angel investors are trying to make money with their investment, as are VCs. And so what you're trying to do with your pitch deck is outline the opportunity, the problem that you're trying to solve, the team that you've got in place, and really get everyone excited about how big of a business this can become. And I think from that perspective, angels and VCs think very similarly.
Yeah, and I go further than that, actually. One shouldn't try to pitch a different deck to different investors, institutional investors or angel investors. For me, this is a two-way process for entrepreneurs. Pitch what you think you want to do. The people who invest in you share that vision. That's a great combination. Don't try to pitch just to win investment.
Yeah, no, because I think we've seen this even with our companies when they're raising a next round. They'll say, well, we've got our $5 million pitch deck and our $15 million pitch deck, and we'll tailor it to different people. And you know what happens is they start getting confused as founders about which one they're pitching to, about why it's a $10 billion opportunity versus a $1 billion opportunity, why they're going to invest $5 million versus $15 million. And I think the same for people raising from angels. You got to figure out the right amount of capital for your business and go out and raise that amount of money. Because otherwise there could be misalignment of expectations as well.
And you lose that passion, which we've talked about in previous episodes, VK. You lose that passion if it's you're pandering to the investor rather than just telling the investor what you think.
Got it. Cool. Let me just restart that there. So a question then on... Stop that, reset. So a question then on a little bit touching on your point of passion, Rogan. One of the questions we had here is, do I need to be working full time on this if I want to go out and raise an angel round? And if I'm not, is that going to lower my chances of raising?
I mean, that's a good question. I mean,
yes, you need to be working on it full time, 100%.
But the reality of life is that you also have to live. And it may be that you need to have a job to be able to survive. And actually, so I'm going to say, VK, that Sean's just answered your question for you. You do for institutions, but I think angels are a bit more human. I think angels understand that, actually not everybody can just give up a job and try to hit their dream. And so because it's often a bit earlier when we talk about angel rounds, I think people do and should have more sympathy for the fact that, however passionate you are about your business, you're going to be equally passionate about living, about a family if you need to, about all of those things. And so for me, and I speak in honesty from a bit of experience on the other side, as it were, I think you can be, before the first round, multitasking.
I think if I look at, yes, it is how people pitch us, but a lot of times they come to us and say, we've got a lot of people lined up ready to go, right? And I can kind of understand that if you're looking at bringing on board sort of the next tier down of founders or employees. I still think if a founder is truly passionate about it, and this is a multi-billion-dollar opportunity, they should get on it as soon as possible.
Got it. Cool. Another question then, perhaps before we talk about reaching out to angel investors, someone's asked here, how much should I raise in the angel round, or how much runway should I try to secure? We've touched on this before when talking about the investment ask for a seed round. Curious about your view when it comes to the angel round.
Yeah, I mean, we are quite consistent in our belief and philosophy that companies should be raising 12 to 18 months of cash at every single stage. I understand, though, that with angel rounds of financing, that might not be possible. And part of the reason is that an angel round, unfortunately, the valuation isn't what it might be in kind of future years of the company, right? So an angel round is arguably a little more expensive than other rounds from a dilution perspective. Yes, in an ideal world, you can raise 18 months, but we see angel rounds generally last at least 9 months because the fact is, even raising your next venture round is going to take 3 to 4 months. And so you need enough runway to prove something, to be able to go to the institutional investors with metrics, with KPIs, or with a further developed product, or with a clear strategy to go to market, whatever else it might be. And generally, that takes time. So you need to give yourself the runway to be able to build that progression.
I'm going to half agree. I mean, the reality is that you always need to have, as Sean said, enough runway to prove the next round. And I think when we're talking about angel rounds, and remember, I don't think there's that much difference. For smaller rounds, it's about product market fit. But the valuation point that Sean raises, I just don't think it's right. EIS means that actually you can get, from a risk return basis, way better valuations at the angel rounds with EIS and dilution than you would do from an institution. And so for the same risk return, you actually are benefiting from raising from people who qualify for the EIS.
Got it. Well, maybe we stick with this topic because one of the questions was going to be, should an angel round be priced? And if so, how do I value the company? Or should I do a convertible where I don't have to worry about price? And
well, VK, I have strong views on convertibles anyhow. I'm not sure that angels particularly want to have a convertible interest in a company and the comfort of the debt security that gives you. Most importantly, and we've mentioned a couple of times, there are government schemes like EIS, SEIS, which benefit angels. It means they can't get preference shares, but they should take equity. You can't get it on a convertible.
Yeah, that's the big thing, at least.
So obviously they're going to price it. I think the risk is that if I'm an angel, or if I'm qualifying for EIS, then like I said, just in the last answer, my risk return is slightly warped by the fact that I'm getting 40% or more if I'm STIS, 45%, 50% back straight away. And that can start to kind of play with the valuations. Although it sounds self-serving, the one thing I would say is that for the next round, you need to be conscious they might not have EIS. We don't. And so if the last round was at EIS and ours isn't, and there's no uplift in the front of things valuation, then that's not actually a good sign.
Yeah, and on top of that, there is something nice about a nice progression and uptick in valuation as well. So if you raise your angel round at too high of a price, the next round is not going to be a meaningful step up or any step up at all. And no one feels great about that, right? You like to see nice, steady movements in the progression and valuation of the business.
Got it. Cool. Stepping away a little bit from pricing and changing tack a little bit, one of the questions here was, I've been told I should usually budget 3 to 6 months to raise a round from a VC. How long should I budget for raising purely from angel investors?
I suppose, and I've got a lot of friends that have raised angel rounds of financing, and a lot of our companies have raised angel rounds of financing. So that's the perspective that we bring to it. It's I suppose it's a little bit of the it starts with kind of how well networked you are into the community of angels, right? Because I think if you are someone who has been around for a while, has good introductions already to angels can move very quickly. They're not institutions. They don't have the bureaucracy, if you will, and that an institution requires about preparing IMs, about multiple meetings, about due diligence, etc. Angels generally make an investment decision after 1 or 2 meetings based on their belief in the market, their impressions of the founder, and the underlying problem that they see. So an angel round can go quickly. Momentum also helps in an angel round. So I guess it depends on where you are from building those first introductions. If you have those in place, it can move very quickly. Otherwise, it can take some time to build up the kind of the network and the introductions.
The biggest difference, VK, and Sean's touched on it, individual angels make much quicker decisions than individual VCs. But an angel round classically has more participants than a VC round. And so it's the herding of the sheep that can take, or the cats that can take the longest time in an angel round. As a slight kind of diversion, there's no way a VC round should take 6 months. I know everyone says that, but that means that you have either not proved enough, you haven't talked to the right people, but at our early stage, there's no way a round should take 6 months.
Okay, cool. The question here, I'm considering doing a crowdfunding campaign rather than raising from angel investors. What do you think the pros and cons are from doing that versus potentially an angel round or a VC round?
The cons are, I think other VCs, but I'll let Sean talk for himself, have a more negative view towards a crowdfunding round than an angel round, because it says, rightly or wrongly, if that's your only source of funding, I couldn't raise from anybody else. The positive, the massive positive, is the marketing and the getting your customers involved. So some of the The banks have done that really, the challenger banks have done that really successfully. But then the signaling is kind of changed because this is a small part of a larger round. It's very much to get your customers involved in the round as well, which in every level is a positive. It shows that you care about your customers. It also shows you want your customers to benefit in your success. So that for me is where crowdfunding is the best. But if it's a pure crowdfunding run, in all honesty, I will look at it less positively than an angel round.
Let me give you another benefit as a founder for a crowdfunding round, Rogan. So as everyone knows, I've invested in a couple of breweries through some of the crowdfunding platforms, so very non-pro founders related investments. And from a founder perspective, it's fantastic because the investors have precious little control or oversight of a business, whereas angels and VCs are going to have a lot more information, kind of oversights and information rights and preferred shares and so forth. Crowdfunding doesn't provide any of that to the investors. And so from a founder perspective, you're much more in control of the business. But yes, there are some downsides to it.
And Vicky, I know we've gone over 1.5 minutes, but just to add to that, one of the things we say, and I think it's really true, so it slightly undermines that point, is that you need to set the scene for the next round as well. And you know what? We and our angels and other VCs should not be taking terms that are detrimental to the business. Yes, of course, we're trying to protect ourselves. But if it's terms that control gets away from you, that shouldn't be the way forward anyhow. So the reality is that, yes, you don't have to give up those controls. And that's great if you just want to build a smaller business. But you are going to have to raise from venture firms at some stage. And those terms are going to come in. Set yourself up for that. Make sure that they're the right terms so they're not overly hamstringing the business.
Got it. I mean, when you guys spoke about it, then you sort of bucketed to a certain extent angels and VCs together. One of the questions we had was, I'm raising a small round. Should I prioritize adding more angels in versus an early stage fund in order to maintain more control? I'm not sure if you have a perspective over the amount of control that an angel might exercise versus a VC fund.
Can I give you just something else to think about I'm not answering the question specifically, VK, but something else to think about. If you raise from a fund and only one fund, you have to be very aware of how they're going to act and behave at the next round of financing, right? Because there's going to be a massive amount of signaling that comes from that. So if you have we always joke about Sequoia, which is now into Europe as well, but if they invest in your pre-seed round and they don't invest in the next round, there are some worries that other investors might see in that. If this firm has great insight into this business, why are they not participating at the next round of financing? And so in that case, actually, I might prioritize having just angels because you don't have to think through or worry about any of those signaling issues. Yes, the key benefit, though, is that if you're doing well, they can step up and write a very big check the next round and make it much easier. But guess what? If you're doing well, you'll be able to raise money no matter what.
To answer your question, VK, I mean, the reason that there is presumably less control being given out is not necessarily just the rights, just that individual people have smaller stakes. And obviously, if you have a bigger stake, you have more control. But here's the thing. This actually is a deeper question about alignment between investors and entrepreneurs, which I would argue at our stage of investment and at angel stage, we're all pretty much aligned. We want the same outcomes. The problem comes when people come in at 100, 200, 300 million valuations, because then the alignments might differ, because they need to have a certain exit, which isn't the same for maybe a founder. But at our level, and at angel level, like I said in the earlier question, you should really be on the same page. This should not be a adversarial position.
Yeah. Cool. A question here about specifically the due diligence, but not from an angel's perspective, from the founder looking at the angel. The question here is it okay for me to ask angel investors about their portfolio to check on conflicts, etc.?
Absolutely. Why wouldn't you, right? If someone's going to be doing due diligence on you and asking you a bunch of questions, you have the right to absolutely do the same to them. And remember, they're going to be a shareholder in your company. Are they someone that you want along for the ride? You need to know who they are. You need to know how they behave in good situations, how they behave in bad situations. So yes, absolutely. By the way, I wouldn't ask them to share some contacts or some names. I would figure out who else they invested in and just give them a call directly. Because otherwise, guess what? They're going to give you only the best examples.
Sean's absolutely right. And to add to that, actually, I would look at their portfolio more broadly than just, is it a conflict? Obviously, how have they interacted? So talk to the portfolio CEOs, but also what were the next rounds of funding? We try to keep our colleagues who have invested and angels who have invested in our portfolio companies beforehand very close, because we recognize that we have a fit with those people. We have a pro angels program, as you know. But look at that, and then talk to the VCs. How do you interact with XYZ angel? Because this is a journey. It really is. And so Sean's 100% right. You've got to do the due diligence.
Got it. Cool. Question here about an angel potentially wanting extra options for committing early in the round. Do you guys think that's okay?
I mean, everything has a price, doesn't it? If you're the first person in, then you're the lightning rod that gets everybody in. You probably do deserve something. If you look at a lot of hedge funds, early investors into a hedge funds get special deals, no fees, stuff like that. So if you are the reason that everything comes together, you're taking the bigger risk. You should get more options. I mean, this is just a negotiation. The real challenge is not whether the person should have asked for it. It's what the other angels will consider.
Well, that's the big thing, Rogan, is that if you are allowing certain people to get advantageous terms, do you have to offer that to everyone else as well? Definitely at a venture capital round, when we go into an investment in a syndicate, if I ever found out that someone else was getting extra options for taking a board seat or whatever it might be, I would be quite frustrated by that, right? So
some funds do take extra shares for work they're going to do, which we do for free. And then what happens if the second close is 6 months later? At some stage, don't you turn around and go, oh, things have improved a lot. You still can't have our pricing.
I agree on that if it's 6 months later, but I think, I guess the main thing about it is
what's the big thing?
I would operate under a sunshine policy. If this came out, how would you explain it? Would you feel comfortable explaining it to everyone else? I think that's the simplest way to do it.
So maybe that's the solution. You do that. You in your back pocket, you think, I will give everybody this if they ask for it. But if people are more reasonable and say, okay, so that person helped close the deal, that was 3 months ago, then that's fine.
Question here on the angel investor and what the angel investor does. For a day job, should I take the angel investor or an angel investor, who is working currently for a potential acquirer?
Depends where they work, really, doesn't it? And what you do. I mean, no is the simple answer. I mean, I think that what you're saying is if I am I'm going to make something up, but if I'm a broadcasting startup and I get a Sky employee as an angel investor, does that mean Sky are going to buy me? I mean, almost undoubtedly not, because there'll be a conflict of interest there. And I'm guessing the person isn't the kind of CEO. But I also, fundamentally, I'm not sure that you ever want to be going in, certainly not in the early stage, with investors who come in at a very, very early stage who might be acquirers. Because all that means is that other people are going to be put off from acquiring that company, and that lowers your potential outcomes at the end. Similarly, we have a slight kind of shiver down our spine when a corporate comes in early because they might be an acquirer. That's not a positive for us. We don't want people to be acquiring early.
Yeah, I mean, listen, every decision that you make, there are going to be positives and negatives that come from it, and there's a risk in doing anything. And so I suppose you have to think through, what do you get out of it? So if there's no other alternatives for the capital, then clearly it might be something you have to do. Or if you feel that, yes, this person as an angel might have extra insight, they might eventually be an acquirer, but in the interim, they're able to provide a huge amount of value, make a huge number of industry connections, then it might be something that you have to consider doing. So it depends on the circumstance.
Cool. We're on time. Question here about what happens when VCs come on board. Should angels sell when VCs come on board and invest in the company?
Well, let me tell you right now, if there was an angel or a group of angels that were desperate to sell when I was looking at investing in a company, it would give me, it's coming up with continuing with Rogan's shivers. I'd be very worried about why, if this company's so fantastic and has so much potential ahead of it, anyone would be interested in selling at that stage, right? I understand when valuations hit hundreds of millions or whatever it might be, that it can be a meaningful return to angel investors, but the kind of the pricing arbitrage or the price gap between when angels invest and we invest shouldn't be enough to make an angel investor want to sell out at that stage. So I would get very worried about it.
I think you have to realize, though, that that the drivers and the situation of angels is always very different to institutions. And so there are situations where, for a variety of reasons, including, by the way, health or financial hardship or any of these reasons, where it's perfectly reasonable, or you're no longer interested, you've made a decent return, and you now want to leave something to your grandchildren or whatever. All of that, I think, is more reasonable in a way. I think that fundamentally Sean's right that we never like to see sellers, because what does that tell you? But there's often a clearer story around angel selling than institutions selling. The one thing, just to go back to EIS and SEIS, remember that because those tax advantages, you need to be a holder for 3 years, I think. So yeah, that would be an oddity if they were selling and giving up their tax allowance.
Right. Okay. Cool. And then, so last question here on sort of the involvement after the financing round, and we've seen this with some of our portfolio companies. How involved are angel investors typically after the angel round in the day-to-day company?
I guess I would say I wouldn't expect any VC or any angel to be day-to-day into a company, right? I mean, the point is that they're investing in backing founders to do great things, not to do it themselves. And so, but as with VCs, we also see a wide range of different levels of involvement, right? Some of our colleagues are fantastic and very helpful and involved. Others say, great, ping me before the board meeting once a quarter. So it really depends on the angel that you've signed up to, that is signed up. But also, I think it's important that you have a conversation with them beforehand to actually set expectations on both sides about how much involvement there would be. I know good angels are very open with companies about the level of time they've got, how involved they want to be. And as long as that relationship is kind of clear from the beginning, there'll be no miscommunication or kind of conflict between the two.
I think one of the greatest regrets that I see is not that angels aren't involved, but that founders forget about the angels once the new kind of shiny coin of an institution comes on board. It kind of happens at every stage, I guess, of investment. But angel investors often can bring a whole wealth of help and experience to the company. And you shouldn't give that up. Just because they're not your biggest investor anymore, you should continue to use it. And I would say that to angels' credits, they often want to be more involved than they are. And founders should utilize every single asset they've got in their disposal. And the angel network is one of those. So I think actually it's the other way around. Founders should use angels more. And we try to promote that with Pro Angels as well.
Got it. Cool. We have gone through all the questions we had for today. So I'm going to hand over to my future self. Cool. Thanks, VK. Appreciate it. Thanks very much for tuning in, guys. We actually had one live question, so I'm going to see if I can rope Sean in very quickly to answer that before we end the session. Just promote him to a panelist. Hey, Sean.
Excellent. Hey, VK. Good to be back on.
Yeah, it's almost like it was just yesterday when we spoke.
Exactly.
So actually, one of the questions that we had live, and we touched on this kind of party round idea when talking about seed rounds with VCs. This party round with angels, would you recommend larger tickets from fewer angels or smaller tickets from a greater number of angels? Is there signaling for later round investors?
Yeah, it's a fascinating question because it's something we think about quite a bit with the rounds that we invest into as well. Do you want one VC doing 2 million? Do you want 10 VCs doing 200K? And the reality is it's probably somewhere in between, right? And same for constructing your angel round. I think if you have 100 angels each putting in £1,000, it's not ideal because it's probably not a meaningful amount of money to each of them. But one investor is fantastic if you can find that person. But sometimes it's more important to have a broader network as well, especially in the early days when the angels can bring more than just money to the table. So I suppose what I would do is I would almost create a matrix and kind of look at the angels about either they're bringing a kind of a big ticket from an investment perspective, or they're providing real value add to you in the business. and look at the potential investors across that, rank them as far as value add, amount they're investing, and try to go for the top right quadrant, if you will, right? And then if need be, look at some of the other quadrants, but probably not the lower left. So if it's someone who is writing a very small check and you don't think will be helpful, I probably wouldn't bring that person on board unless you absolutely have to. And just really think about what's the ideal construct between amount and value add to the business.
Got it. Thanks a lot, Sean. I really appreciate it. That's all we had time for. So thanks everyone for tuning in to season 2, episode 3. Thanks to you and also Rogan couldn't be here for answering the questions. As always, this episode will find its way to our Notion community where I'll be adding more resources for each episode and each question. Tune in a couple of weeks' time for the next episode. Stay safe, everyone. Thanks.